Hey, how you doing, Econ students? This is Isaac Nocon. Welcome back to ABCD Econ. Right now, we're going to be talking about my stock market project, which, as you can tell, is about stocks. For my stock market project, I collected data on the closing prices and average daily trading volumes of 10 stocks. I also bought and sold positions with a hypothetical $100,000 in these stocks as well. The 10 securities that I chose for my portfolio were CRWD, PD, CSIQ, SIG, HUYA, CHWY, JKS, SPY, DIA, and QQQ, which I will also go over individually in a moment. I will also go over how much money I would have gained or lost, and the main takeaways I got from this whole experience of analyzing the daily closing prices and average daily trading volumes of these stocks. So the first stock is CRWD, or CrowdStrike Holdings Incorporated, which is a cybersecurity company based in Sunnyvale, California. They provide cyber services such as security against cyber attacks and hackers, and they also collect information about potential cyber threats. So the reason why I bought this stock is because CrowdStrike had earnings on March 16th, 2021, and I wanted to know the price action on the stock post earnings. And also, this is the main reason why I chose most of the stocks in my portfolio, which is to analyze the price action on the stock after its earnings release. So, on the left side of my spreadsheet, I have the data of the closing prices and average daily trading volumes that I collected from March 15th, 2021 to April 23rd, 2021. Then I have my initial investment, final sale, and return on investment, or ROI, on the stock. Below that, I have charts of the closing prices and average daily trading volumes that I recorded. On March 15th, I did a market order to buy 50 shares of CRWD, and my order was filled at $199.21. So it was a total of $9,960.50. There are several other types of orders, but a market order is an order to buy or sell a stock immediately at the next best available price. On April 23rd, I did a market order to sell 50 shares of CRWD, and my order was filled at $220.88. So it was a total of $11,044. To calculate my ROI, or my return on investment, I did my final sale of $11,044 minus my initial investment of $9,960.50, which was a profit of $1,083.50. To calculate the percent gain of my ROI, I did my profit of $1,083.50 divided by my initial investment of $9,960.50, which was 10.88%. So I did this whole mathematical process to calculate my ROI on my other stocks as well. So the reason why I sold is the same for all the securities in my portfolio, which was to see how much money I gained or lost if I sell after 6 weeks of holding the security. And here are the charts of the closing prices and average daily trading volumes that I recorded. All right, on to the next stock. So the next stock that I have is PD, or PagerDuty, which is a cloud computing company that provides an incident response platform or handles data breaches and cyber attacks for other information technology companies. So the reason why I bought this stock is because it had earnings on March 17th, 2021, and I wanted to know the price action. So here is the data that I collected, And so for my initial investment, I did another market order to buy, as I did with all my other stocks. And I got filled at $42.27. And then for my final sell, I did a market order to sell, and my order was filled at $42.07. And my ROI was a loss of $47.20, and the percent loss was negative 0.47%. And here are the charts on PD's closing price and their average daily trading volumes. All right. So the next stock that I have is Canadian Solar Incorporated, and it is a company that produces solar panels and installs the panels on a large scale. So here is the data that I collected. And so for my initial investment, I did a market order and I got filled at $44.97. And I did another market order to sell and I got filled at $45.82. And this resulted in an ROI of a profit of $188.70 and a percent gain of 1.89%. All right, so the next stock that I got is Signet Jewelers, which is the largest diamond jewelry retailer and is the parent company of Kay Jewelers, Zales Jewelers, and Helzberg's Diamonds. And so here's the data that I collected. And so for my initial investment, I got filled at $59.95. And for my sale, I got filled at $63.29. And that resulted in a profit of $554.44 with a percent gain of 5.57%. And here are the charts on the closing price and the average daily trading volume. All right. Next stock is Huya, which had earnings on March 23rd, and it is a Chinese company that produces video games. And so I did a market order and I got filled at $25.75, but I sold and did a market order to sell and I got filled at $18.26, which resulted in a whopping loss of $2,906.12, or a percent loss of negative 29.09%. All right, so the next stock is Chewy, and this is the data that I collected. And Chewy Incorporated is an e-commerce company that provides food and products for pets, and it had earnings on March 30th, 2021. So I got filled at $85.54, and I sold. My market order got filled at $80.07, which resulted in an ROI of a loss of $634.52 and a percent loss of negative 6.39%. Here are the charts of the closing price and average daily trading volume of Chewy. Okay. All right, next stock I got is Jinko Solar Holding Company, and it is a Chinese company that is the world's largest solar module producer. And so I did a market order to buy and I got filled at $47.12. Then I did a market order to sell and I got filled at $39.13. And my ROI was a loss of $1,693.88 with a percent loss of negative 16.96%. And here are the charts of Jinko Solar's closing price and their average daily trading volumes that I recorded. All right, on to next stock. So these next three securities that I'm going to go over are not stocks. They are exchange traded funds, or ETFs, which are groups of stocks that represent an index, sector, mutual fund, etc. So this next ETF is SPY, which is an exchange-traded fund that is designed to track the S&P 500 stock market index. The S&P 500 is a group of 500 large companies in the stock market. So the reason why I chose this stock is because it is an ETF for the S&P 500, and I wanted to know the price action of this index from March going into April. All right, so here's the data that I collected on the SPY. And so my initial investment, I did a market order to buy, and I got filled at $3.95 and 3 cents, and I sold. I did a sell order, and I got filled at 4.17 and 7 cents, and this resulted in a profit of $551, and the percent gain was 5.58%. So here are the charts on the closing price of SPY and the average daily trading volume of SPY as well. Alright, so next is the Dow Jones Industrial Average Trust, which is also an ETF. It is an exchange-traded fund that is designed to track the Dow Jones Industrial Average Stock Market Index. The Dow is a group of 30 large, well-known companies in the stock market. Alright, so DIA, I did a market order to buy, and I got in at $328.72, and then did a market order to sell, and I got out at $340.42. This results, my ROI was a profit of $351, and the percent gain was 3.56%. And here are the charts. And I think, yeah, this is the data that I got. And next is QQQ, and which is an exchange traded fund that is designed to track the NASDAQ 100 stock market index. The NASDAQ 100 is a group of 100 large companies in the NASDAQ stock market. So the reason why I bought it is because it is an ETF for the NASDAQ 100, and I wanted to know the price action of this index from March going into April. Alright, so here's the data that I collected on the left. And so I did a market order to buy, and I got in at $317.70. And I did a market order to sell, and I got out at $340.11. This resulted in a nice profit of $694.71 with a percent gain of 7.05%. So here are the charts of the Q's price, closing price, and their average daily trading volumes. Alright, so here's an overview of my whole stock market project. So I initially invested a total of $99,360.39. And then for my final sale, it was a total of $97,502.02. And my ROI was a loss of $1,858.37. And my percent loss was negative 1.87%. So here are my main takeaways that I got from this whole process of analyzing the daily closing prices and average daily trading volumes of the stocks that I chose. So first, I noticed that the average daily trading volume for a company sharply increases during that company's earnings. 2, there is often, but not always, a short sell-off in price after a spike in volume. But however, this does not apply to the market ETFs, which were SPY, DIA, and the Qs. And 3, volumes slowly decrease as the price of the market ETFs slowly increased. So I will go over examples of these takeaways with these stocks right here. And here we go. Alright, so my first takeaway is that volume increases during earnings. So CrowdStrike had earnings on March 16th, around this time, and as you can see, there is a spike in volume. All right, so the next one is PagerDuty, and they had earnings on March 17th. And as you can see here, there is also a spike in volume. And the next one is CSIQ, or Canadian Solar. And as you can see, they had earnings on March 18th. And here is the spike in volume and during earnings. And the last one is Chewy, which is down here. They had earnings on March 30th, and as you can see the noticeable spike in volume during earnings. Alright, so my second takeaway is that there is often, but not always, a short sell-off in price after a spike in volume. So for example, here's CrowdStrike, here's the spike in volume, and here's the short sell-off. Right there, you can just count this whole thing, but next is Signet Jewelers, which is right here. As you can see, the spike in price from earnings, the spike in volume from earnings, and then the short sell-off after that. And then you can even count this spike in volume and then the short sell-off in price there. Next is Chewy. Right here, as you can see, this spike in volume and then the short sell-off in price. And then Jinko Solar. They had earnings on April 1st. There was a spike in volume around that time, and then there was a sell-off. And then you can count this spike in volume right here, another sell-off in price. All right. All right, so my last takeaway is that volume of an ETF slowly decreases as the price of the market ETF slowly increase. So as volume decreased, the price increased. So as you can see, price increased and then volume slowly decreased as well over time. And then with the Dow, the DIA, the price slowly went up and then volume slowly went down on a downtrend there. And then with the Qs, price went up and the volume slowly went down. And that is my last takeaway. Alright, thank you for watching, and I hope you have a day that is as beautiful as you are. Thank you.